Yeah, this one I wasn't really surprised by for a couple reasons, and I described the ETF as the most boring thing, kind of in Bitcoin at the moment, which kind of caught some flack, and some people were polarized in that comment. But basically,
Provocative.
yeah. So basically the ETF providers are, a lot of this was aware, right? So it's like they're already lining up liquidity that they're going to need. There's going to be some exit from GBTC. There's going to be inflows to some combination of the others. So I had a really big range where nothing would be surprising if we had a $5,000 candle, if we had a big sell the news event. But the other kind of signal was there are so many people calling for either a God candle or a sell the news event. There was hardly anyone calling for choppy Cs, nothing particularly remarkable. And so the fact that that's what we got is kind of the pain trade.
With the recent release of Bitcoin ETFs in the digital space, the crypto community is buzzing with excitement, embracing this new investment avenue. However, in the midst of all the excitement, there is someone who disagrees with all the hype. Lyn Alden, CEO of Alden Investment Strategy, describes ETFs as the most boring thing in Bitcoin. This seemingly mundane description, though, became a focal point that sparked a lot of attention and divergent opinions within the cryptocurrency community. But what is the true reason behind her statement? Our video for today is going to discuss why. We'll also discuss the many other insights and predictions Alden has recently given regarding the new venture. So if you're ready, give this video a like and let's proceed. To start off, Alden's choice of words, labeling the ETF as boring, suggests her belief that ETF providers had been thoroughly preparing for its introduction. This preparation involved strategic steps such as aligning liquidity and contemplating the potential repercussions on existing Bitcoin investment vehicles like GBTC or Grayscale Bitcoin Trust. Despite the anticipation of significant market movements and reactions, Alden notes that the actual response from the market was notably restrained, pointing to a level of planning and perhaps even a touch of anticlimactic. The comprehensive groundwork undertaken by ETF providers likely contributed to a more controlled and less dramatic market reaction. Lyn Alden delves into the dynamics of capital flowing into Bitcoin, emphasizing the role of the ETF in normalizing the asset. By providing a long-term option for capital to gradually enter the Bitcoin market, the ETF addresses a significant barrier that previously hindered certain capital from participating. Alden notes that a substantial amount of capital within existing financial markets has been eager to find its way into Bitcoin. The ETF, by making Bitcoin more accessible, acts as a conduit for this waiting capital, potentially leading to significant inflows. But are ETFs really the game changer everyone claims? Or is there a side of the story that hasn't been fully explored?
And so, for example, I'm doubtful that ETFs are going to drive the next bull market, but I think that as that bull market materializes, that's another ease of inflow that could make the bull market do better than it would if these ETFs did not exist. And so it's money tends to chase price, ironically. So it's like, I think that the next bull market probably comes from the same types of directions that the prior bull markets came from, which is, we went through this bear market, a lot of the fast money's out of Bitcoin. It's kind of gravitated towards those strong hands, people that are dollar cost averaging in, people that just, they're like listen to podcasts like this and they don't really plan on selling for the foreseeable future. They're kind of locked in. And so eventually you kind of get that really tight supply situation. And then you get better liquidity conditions. So I've been kind of beating the drum for a while that Bitcoin is very correlated with global liquidity metrics, more so than any other asset I track. And it's also the inverse is true. So if I look at all the things that are correlated with Bitcoin, liquidity is arguably the highest. So when the liquidity goes up, that tends to be constructive for Bitcoin price. But then it's especially so when you've been in a bear market for a while, and a lot of those loosely held coins have gravitated towards the stronger hands that are only going to come out with like a 5x increase, and as like a starting, like basically once you breach all-time highs, when you start to get a little bit of distribution from those types of hands, and then also when you break all-time highs, that's when people in their RIAs are saying like, why aren't we in Bitcoin? The ETFs came out months ago. What are we doing? And so then you can get some of the inflows, and that's where I think it could add to it. It's certainly a constructive, positive variable, but for me, it's not the key catalyst, most likely. So I don't know if they specifically will, but I do think that on on average, the more widely held something is, the less volatile it can be, and the more liquid it can be, right? So when Bitcoin's small enough that like FTX, like rehypothecating, $1.5 billion worth of Bitcoin can really mess it up. That's that when that kind of thing can happen, it's going to move price more. Whereas if it's 5 times as widely held, if it's 10 times as widely held, then there's fewer entities that can play games and kind of really mess up the price. And the asset's more diffused in portfolios that are not like quote unquote crypto focused, that all get liquidated at once basically. And so, to the extent that people have it as a slice in a portfolio and rebalance it from time to time, whether it's the ETF or other vehicles. I mean, the ETF's now the most convenient vehicle for that. But there's also other ways to do it. That should, in theory, have a dampening effect on volatility. It doesn't mean I don't think we're going to have a big bull run and then probably a pretty big drop, but I think it could start taking the edge off in either direction.
While Alden expresses skepticism about ETFs being the primary driver of the next bull market, she recognizes their potential impact as the bull market materializes. The ease of inflow from ETFs could enhance the overall market performance, contributing to the growth trajectory of Bitcoin. Alden also introduces the idea that widely held assets, like ETFs, might play a role in reducing Bitcoin's volatility. She anticipates a dampening effect on volatility, especially as Bitcoin becomes more widely held, a factor that could contribute to a more stable market environment. Addressing concerns about the ETF, Alden takes a somewhat conservative stance, finding the topic boring in the sense that she perceives the risks and upsides as moderate. She acknowledges the substantial number of coins already in GBTC, but expects a net inflow. Downplaying concentration concerns, Alden argues that Bitcoin has had 15 years to distribute and doesn't foresee the ETF fundamentally altering its decentralized nature. She views the introduction of ETFs as an inevitable step in Bitcoin's evolution, suggesting that if Bitcoin cannot withstand the existence of an ETF, then its perceived significance might have been overstated from the outset. Responding to critics who suggest that Bitcoin has lost its mission due to the ETF, Alden firmly asserts that the open-source network of Bitcoin remains unchanged. She characterizes the ETF as an additional layer created by entities not affiliated with Bitcoin, emphasizing that the core mission and nature of Bitcoin persist despite such external developments. In this view, the ETF is portrayed as a tool or instrument superimposed on the underlying integrity and purpose of the Bitcoin network. But what about the GBTC, Fidelity, and the nuances of taxable accounts? Let's find out more about them in the next clip.
If you have GBTC in like a retirement account, and this is not individualized investment advice, but it's how I would think about it, is that I would switch over to one of the cheaper ones, because you're giving up fees for no good reason. I personally, and also if you have a very large holding of the ETFs, you might want to split between, for example, the Fidelity one and then one of the others that uses Coinbase, so at least you distribute your custody among 2 different custody providers. Yeah, and I like Fidelity. I mean, they've been in the space for like a decade. They're kind of like the based ones of these launches, so I just kind of incline towards Fidelity. But in general, yeah, you want to go towards one of the lower fee ones. If you have it in a taxable account, you have to be careful, because if you have really big capital gains and you sell it and buy another one, it's kind of like, penny wise, pound foolish, because you're saving on fees, but then you're getting killed on this kind of taxable event. And so you have to be careful about that logic. And so instead, it's like, if you're planning on trimming, if Bitcoin goes up a lot in the next bull run, if you're going to sell anyway, that's the time to maybe exit some of these less ideal vehicles. Whereas if you're in a tax-free account, you can make that decision more quickly, because there's really no downside from doing it. So that's how I'm going to approach that, is to let people know that depending on where they're holding this portfolio, some of the options make sense for others. Certainly for any sort of tax-free account, retirement account, I would hastily want to switch over to the cheaper ones. And personally, I like the Fidelity one. A little bit of distributed risk towards another vehicle, given the limited options available prior to the ETF launches. I think it's a great company. The fact that you have fixed non-callable leverage attached to Bitcoin has been really well played. Their their treasurer, the one who actually handles the tactical decisions on, how they're going to optimize their holding. When the equity gets expensive, they're like selling more equity and buying more Bitcoin. When they had options earlier, they were issuing that debt. So I think they've managed that really well. They've actually de-risked their balance sheet by issuing this more equity. I think over time, that premium's probably going to decrease because now there's purer ways to express a long position. I still think it's somewhat rocket fuel because you have that kind of fixed amount of leverage attached to it. So if someone's really bullish on Bitcoin, that can still outperform. So it's not like I think that MicroStrategy doesn't serve a role anymore. I just think that it's earlier use as a Bitcoin proxy is now somewhat diminished by the ETFs, and I think they understand that. I think that basically they've been a really important vehicle in the time they're at, and they permanently improved the value of their company by playing that role at a time when people needed it. And so now even if people switch over to the ETFs, that doesn't change the fact that MicroStrategy has a really big Bitcoin hoard now. It might grow more slowly than it did because of the arbitrage opportunities that were available, but they still have it, and they still have a good software business. And so I think they made all the right moves, pretty much.
During the interview, Lyn Alden discusses considerations for managing a portfolio containing GBTC or similar Bitcoin exposure vehicles, particularly in the context of potential tax implications. She suggests that the decision on how to handle the portfolio depends on the tax status of the holdings. For those with GBTC in a retirement account, Alden recommends switching to one of the cheaper alternatives. The rationale is to avoid unnecessary fees, especially when held in tax-advantaged accounts where capital gains tax implications are not a concern. She also suggests diversifying custody risk by splitting holdings between different ETF providers if the allocation is substantial. Alden expresses a favorable view towards Fidelity, citing its long-standing presence in the space, and considers them as one of the more reliable options among the various ETF launches. However, she generally advises moving towards lower fee options regardless of the provider. When discussing taxable accounts, Alden warns against triggering substantial capital gains through a sale and subsequent purchase of another vehicle just to save on fees. This caution stems from the potential tax implications that may outweigh the fee savings, making such a move counterproductive. Instead, she suggests making these decisions more carefully and potentially considering the switch when planning to trim the Bitcoin holdings during a significant market move. Regarding the allocation to MicroStrategy, Alden views it as a diversifier, expressing her initial preference for it due to the lack of complete trust in GBTC. She notes that MicroStrategy has managed its non-callable leverage well, optimizing its holdings based on market conditions. Alden acknowledges the company's strategic decisions, particularly in issuing equity when it became expensive and de-risking its balance sheet. While she recognizes that the role of MicroStrategy as a Bitcoin proxy might diminish with the introduction of ETFs, she still sees value in its unique attributes, especially the fixed leverage attached to Bitcoin. Thank you for tuning in to today's discussion with Lyn Alden on Bitcoin ETFs. If you found this information valuable, don't forget to hit the like button and subscribe for more insightful content. Feel free to share your thoughts on Bitcoin ETFs in the comments below. We love hearing from our community. And of course, if you want to stay updated on the latest trends in the world of crypto finance and investments, make sure to click that notification bell. Until next time, happy investing.